Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to talk about Pembina pipeline stock. I will discuss their business, their future plans for 2022, their dividends, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted cash flow model, and will then provide you with the fair value of this stock depending on your investment goals. The company headquarters is located at Calgary, Alberta, and their shares are traded on Toronto Stock Exchange for 39.67 cents at the time of the recording this video. They pay a significant dividend with a yield of 6.42%, and the market capitalization of the company is around 22 billion Canadian dollar. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion, and you should always do your own research before making any financial decision. With that being said, let's start the video. Okay, so the first part, I want to talk about the business. Pembina Pipeline is a Canadian energy transportation and midstream service provider with more than 65 years of history. Their business has three main divisions: Pipelines division, which is the main business, Facilities division, and a small subdivision that they call it Marketing and New Ventures. They own 18,000 kilometer pipelines that transport oil and natural gas primarily in Western Canada, British Columbia, and Alberta, as you can see in this graph. They also own gas processing facilities and oil and natural gas liquids logistic businesses in various parts of Alberta, British Columbia, and even in north of the United States. Their new venture business is basically buying and selling products like natural gas, propane, and crude oil, arbitrage, and also storage businesses. With the strong commodity prices and strong production volumes that they had in the recent quarter, particularly in crude oil and natural gas sector, it seems Pembina business has a strong outlook for 2022. Overall, Pembina Pipeline is an established company with excellent track record in running pipelines and expanding their umbrella to other energy generation, storage, and transportation sectors. For example, they recently announced a power purchase agreement with TransAlta on a 100 milliwatt wind power project. And it seems they want to not only capitalize on the expansion of their pipeline business, but also they want to enter to the low carbon emission and renewable game with this purchase. According to the recent call, the conference call, it seems for 2022, the company will focus mainly on their pipeline and facilities business by spending $350 million in pipeline projects and $140 million in facilities project, as you can see here, while the new venture business will only receive $40 million. The company expects to be able to increase their earnings before interest, tax, and depreciation in 2022 by 3 to 5%, which is a modest expected growth. If we look at the past performance of the company, particularly at their operating cash flow, we can see that the company was able to approximately increase their operating income by almost 6% per year in the last 3 years. Of course, 2020 was a disaster for most of the oil and gas companies. As such, I would say the company expected rate of growth does make sense, and we should probably expect similar numbers. I would say 3 to 6% growth in the operating cash flow of the company in 2022, depending on how things are going in the economy. Overall, not a great growth rate for this business. The company has an excellent track record of paying dividend and increasing their dividend year after year. They did not increase their dividend in 2021, but at least they didn't cut the dividend like Suncor Energy. And to be honest, the current yield of almost 6.5% is still great. They also pay the dividend monthly, which can be a plus for some of the investors who are looking for monthly cash flow. Regarding the dividend safety, some people say they have a high payout ratio for it, and things like that. But for a company like Pembina, you should not look at the traditional metrics, and you should always look at their dividend payout compared to their cash flow from operating activities. If you look at that, for 2022, they anticipate to pay less than 70% of their operating cash flow. I mean 1.5 billion through dividend, which is pretty safe. They will still have $700 million for growing their business and investment activities, and they even anticipate up to $200 million for share buybacks, which can give even a better return for shareholders. In the last presentation, Pembina management mentioned that they will stick to their financial guardrails to avoid any major downside to their business. And I believe the decision to not increase the dividend in 2021 was related to this keeping their financial flexibility and guardrail. Pembina has long-term contracts, and I personally believe the risk with this business is not significant. It's overall a very stable and predictable business with predictable cash flows, and I'm not concerned about the cash flow of the business at all. This is my favorite part of the video, where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted cash flow model, which basically estimates value for stocks based on projections for their future cash flows. So I make some assumptions about the growth of the company in the next 10 years, and then discount the future cash flows into the present value of the stocks based on my expected rate of return. So I start with the past 4-quarter free cash flow of the company, and based on 3 different scenarios, I predict the future cash flow of the company in the next 10 years. In the bear case, I mean the most negative case for the stock, the company can grow 12% in the short term, and then the growth will drop to 8% in the long term. The 12% growth is coming from growth in the business, the dividend growth, and also the dividend itself. I consider a terminal multiple of price to cash flow of 7 for this case, which is consistent with historical bear periods for this stock. For the normal case, I consider a little bit better growth and a terminal multiple of 10, which is the historical average multiple for this stock. For the bull case, or the best possible outcome for this stock, I consider the business grows by 15% in the short term, and then it drops to 12% in the long term, and I consider terminal multiple of 14, which is the bull multiple for this company. If I give a 50% chance to normal case, a 25% chance to the bear case, and 25% chance to the bull case, and if I expect a 10% return from the stocks, the fair value of this company is 40.67 cents, right? So 40.67 is the fair value of this company with these assumptions, which means compared to current share price of almost 39.5, the shares are traded at 2% discount. It means if you expect 10% return on your money, the stock is probably going to deliver that 10% in the next 10 years, 10% per year. And it's a buy according to the model. 10% return seems in agreement with the company projections of 3 to 5% growth on top of the 6.5% dividend yield. I usually aim for 15% in my analysis, and if I put 15% as my expected return, you will see that the current stock price is 33% expensive for 15% return. It means you cannot expect that kind of year-over-year return from this company. And I'm fine with almost a guaranteed 10% return from this stable company, to be honest. It's always fun to see what analyst predictions are for a company, and according to Yahoo Finance, the analyst price targets for this company is currently at $44 per share for 2022 with a buy rating. At the end of the day, if you're looking for a stable, predictable, and high-yield company with monthly dividend payouts, Pembina Pipeline can be a stock to look at. It doesn't provide high growth, but it provides predictable monthly cash flows with little risk at the current valuations. I personally own Pembina Pipeline in my portfolio as my only energy sector stock and one of my core holdings for stability and monthly cash flow. I'm personally fine with that 10% annual return of this stock. I hope you enjoyed the video. I know it was a little bit long, but I tried to go over everything. If you enjoyed the video, please leave a comment and let me know what stock you'd like me to review next. And please consider subscribing to the channel to see similar videos in the future. Thank you for watching, and I hope I see you in the next videos. Farewell.